Hello traders, this is Ala Peters, founder of Alpha Wave Trader Method. In this webinar, I will be sharing with you what Alpha Wave Trader Method all about, but more than anything, I look forward answering your questions. Please do spend time reading US government required disclaimers about risks involved in trading, and never ever trade with risks you cannot afford. So, what makes Alpha Wave Trader Method so different? Alpha Wave Trader Method involves no software, no indicators of any kind. All the decisions about trade entries, profit targets made based on price and Fibonacci. Every single trade taken based on the market structure and exited using Fibonacci levels. So, when we came to the markets this morning with my students in Alpha Wave Traders Club, we were literally in tears. We said, God, oh God, why, oh why, you giving us these levels? Nothing good happens here on S&P, as we are not far off from reversal zone. This was one of the slowest days I can remember on history, as we knew extremely well. Buying anywhere near this area was very bad idea. And if you know anything about market structure, you would know extremely clearly that out of 4 trading hours, we had 3 dojis. Complete indecision. Last buying opportunity in the markets was in overnight session. All the levels on S&P drawn more than a week ago. I had been gone since last Wednesday, and I haven't touched levels since last Monday. Price reversed first time from reversal zone, and this was massive chop. We finally took trade, conservative trade that collapsed for a couple of points from this area. But there was absolutely nothing spectacular about market structure today. An unbelievable struggle on S&P due to this area, as expected. The same formula applies to weekly, monthly, ETF, stocks, options, anything that has price. And formula remains the same, and that's precisely the reason why I only pay attention to price before any news, and I stopped using indicators many years ago, recognizing that every single indicator that I ever came across is delayed. Every single indicator that I ever worked with software developers or indicators personally, shows you everything that happened after the fact. No indicator on the planet will ever tell you far in advance where most important critical profit targets, turning points, reversal zones will be. Price tells you everything you need to know only if you apply critical rules. For example, if you take a look on S&P monthly, S&P spelled out all the levels since 2011. Only a couple of times in the last 2 years I had touched these levels. What are we seeing on S&P? We're seeing extremely similar structure. Where did the bounce came from on monthly? Decision point 2, except this is monthly chart. It is not hourly chart. Anybody remembering any similarity? We were just looking at hourly. Bounce came from decision point 2. Exact same formula. What are you seeing will be next? Reversal zone. What has happened on hourly? Ouch. Massive chop. So, what you're seeing on monthly is something we had not seen in years. Reversal zone is not far off. It's gonna get pretty interesting on S&P monthly. Again, pay attention to what happened last time on S&P when it came to the end of the minor trend. Price struggled here for a couple of months. Here is decision point 2. Next level reversal zone, 2100. gonna get pretty interesting. Will the sellers find powerful selling pressure? Or will market will give us only worthless corrections, just like S&P had done on hourly today? Identical structure, identical last buying opportunity. All spelled out by price far in advance. No delayed indicators here. So here's an example of one of the very last indicators I had used and one of the most popular indicators in the markets. Moving averages crossovers, which are absolutely fantastic in trending markets. But major problem plays out on day like today, when market in consolidation. Ouch! Nothing good happens. By the time you're supposed to enter long, price reverses and goes short, and vice versa. Ask yourself what happens here if you're using MACD. Ouch is the name of the game. Not a good idea. Trending markets happen only 20% of the time. No moving average crossover would tell you that Apple wrapped up bearish correction and was not able to break outside of reversal zone, finding buying pressure, and here setting up for major collapse. Nothing had been touched on Apple Weekly in over a year. And here it is, reversal zone 3. The power of the selling pressure at this level will determine what happens next. But expect at least bearish correction, if not bearish reversal. There we go. Long from 70 at very, very powerful reversal levels. Levels you do not want to ignore. And there we go. 95 was not broken. To the downside. Correction ended here. And you know all these levels if you apply alpha wave trader rules. And if you apply alpha wave trader rules, you do not get chopped up in corrections. You walk away from computer, and that's one of the most essential and critical components in your personal trading. Recognize when to walk away from corrective markets and when not to be stuck in corrections is the most crucial and the most critical. So here's a chart of one of my mentoring students who came to me after being a trader for 20 plus years. When I work with you in private mentoring, I log in into your computer and I see what you had been trading prior. So I said, let me take a look, Jim, and see what's on your charts. After 9 indicators, I gave up and I said, forget about it. There is nothing inspiring about this. I don't understand what you're trying to tell me here because the most critical component, price, is completely blocked. So the investment trader produces is not into his knowledge, is not into improving himself versus investment in indicators. And it becomes endless sequence of events. Investment not into yourself, not into your knowledge, but into something that you put far in above yourself. When you come to alpha wave trader method, you see absolutely nothing of a kind. You only see charts like this. This chart's telling me volume, reversal, buying points, profit targets. In trading room, I demonstrate the method on S&P and oil. Our students trade ETFs, stocks, options, any instruments and any time frames. Formula remains the same. It's that simple. No need to make it complicated. No delayed indicators here. So why is Fibonacci such a fascinating sequence? Fibonacci is a concept that applies to everything that surrounds us. Nature, reflection of yourself when you look in the mirror, has exact same symmetry in price. And if you only identify very essential and very critical rules, you know where these critical levels are. If you would take a look on oil monthly, you would recognize that this is the first time in 2 years Oil visiting the end of the minor trend. Levels not touched on oil since 2009. And this is a level that's respected today. This is where oil ended last collapse in 2011. Buyers stepped in with vengeance. This is the last time buyers came in, once again in 2012, and here we go again. But guess what? This time oil is telling us something very, very different. This time oil is telling us, there is a chance this level may be broken and price will collapse drastically lower. What oil is telling us currently is the most important thing. Respect the end of the minor trend. 3 waves are in, as market always moves in 3 waves, identifying minor trend, and the response here is absolutely crucial. And that's precisely why oil had been finding quite a bullish rallies from smaller time frames. Except not the morning like today. When we came to the markets, I said, forget about it. Bullish rally is way overextended. Who wants to buy oil at that area? Not us. It was that clear and that simple. We waited for oil to push down. We monitored the power of pullback. And frankly, I expected oil to take a major pause here. It didn't do so. It reminded you, respect reversal zone. This is where we monitored patiently for our last buying opportunity. And what did oil reminded us? Oil is low liquidity instrument. Would take you for a spin of a lifetime. If you're trading oil, you are an experienced trader. So oil collapse continue. It's quite impressive and quite powerful. And I will give you projection on oil very, very shortly. Just remember, this is what I'm projecting for the next 2 years. If oil is not going to find pretty powerful selling pressure spelled out by price since 2009, oil is heading here, 62, and all the way to 42. But this is the most critical level in the market structure. This is the end of the minor trend. And this is absolutely essential target to the downside if you are a position trader. Decision point 1 is never ever to be ignored. We always have minor trend. We not always have major trend. And that level will forever remain the most crucial component in your trading. And that's all I use. I use Fibonacci levels. The same formula I use on monthly is exactly identical to what I use on 1 minute, 3 range, 85, tick, whatever chart there is. Formula remains the same. So this is the formula I used in my method named golden ratio. This is a formula that identifies trend inception and trend reversal levels. It's that simple. If you had been paying attention to gold daily, you would know extremely well why gold had found such a power. Because gold also reached the reversal zone. In just a second, I will highlight to you something that also posted on Fibonacci trading archives. So pay attention to what has happened on gold. None of the levels touched in forever. Gold found quite an impressive bullish rally on daily chart, correct? Pay attention. Level not touched in months on gold. Reversal zone is in. Buyers are here. But what has happened to the upside? How come gold did not made it very far? It came to the end of the minor trend and it found selling pressure. And where is gold now? Once again, the reversal zone 3 and buyers are here. If you are shorting gold, you are shorting gold from here. Make sense? No levels had been touched in forever. And that was spelled out forever and ever and ever on our Fibonacci form. That's simple. All the levels spelled out far in advance. So this is a principle I use in the course. This is a principle I was teaching this afternoon to our students. Only trade wave 1. Obey the rules, enjoy the power, and only trade based on the rules. Stay out of wave 2. Who wants to be a counter trend trader? If we're stuck in a trading room in counter trend structure, I will tell you extremely clearly. This is counter trend trade, therefore it is an aggressive trade. And that's all that matters. Most crucial waves in the market structure are wave 1 and wave 3. In a couple of minutes, Nina, I will be wrapping up and I look forward answering your questions. So, those are the waves we're focusing on. This is how I see the markets. Major trend consists of 5 waves. Minor trend consists of 3. I have extremely simple mind. I have no interest in anything outside of number 5. You get extremely lucky if you're catching the end of wave 3. In Alpha Wave Trader, you learn this is what happens if you start buying in reversal zone. Bad idea. Markets become extremely unpredictable. And that's exactly the structure what you're seeing here. You may get lucky once in a while, but if you are prudent and solid and conservative trader, your last buying opportunity is here, not here, way too late. And that's all there is. Pure price for entry and Fibonacci for exits. And this is what we use in the course consistently. And this is all I trade. Enjoy the ride. Wave 1, stay out 2. Most powerful and most crucial wave in the market structure, wave 3. Never ever ever wave 5. By the time you come to wave 5, you are in significant profit. As you witnessing, nothing good happens if you start acquiring position in reversal zone. And this is one of the most crucial components in your personal trading. Respect ranging markets. Ranging markets playing out 80% of the time. That clear and that simple. You can't be going for exponential targets if market have 2-point range, which demonstrated by S&P today. It was extremely clear when we came to the market this morning. The best thing to do was to walk away from computer. Ultimate description of very important area. If you are stuck here close to reversal zone, nothing good happens. Not inspiring structure on S&P whatsoever. And when you come to powerful trading markets, and if you listen to audio testimonies on the website, to our DEX traders, to our Forex traders, they're going for drastically larger targets. If you're trading low liquidity instruments, it's absolutely expected. Therefore, you have an opportunity to catch much bigger targets. But the rules is what telling you if the market will be trending or if the market will be ranging. In this particular example, once again, wave 3 is crucial. Buying at the end of wave 3, bad idea. And if you're using exact same rule to the downside, you are seeing nothing good happens if you selling at the end of wave 3. Here's a few examples, and I look forward to answering your questions. Classic structure on Euro 3-minute chart. Ouch, end of wave 3, nothing good happens. Buy at the inception, don't buy at the end. When you come to the markets and markets are at such crucial levels, it's absolutely essential and critical to walk away from computer. If you're a knowledgeable and experienced trader, you're recognizing that. 30 to 40% of the time, markets are in correction and consolidation, not tradable. It's absolutely crucial. It takes you trading to entirely new level. And when market give you something as classic as clean as this chart on Google 1 minute, you enjoy the ride. But once again, you completely stay out of wave 2 and wave 4. Not a good idea. In the course I teach to trade only with trend, with powerful and crucial 4 rules. With 2 key concepts: pure price for entry, 4 rules obeyed, take a trade. Fibonacci applied for targets, no software, no indicators, any market in any time frame. This afternoon I was teaching on range chart, minutes chart, hourly chart. Any chart has exact same formula. Choice is yours. What's appropriate for you, your psychological comfort, and your account size. That determines these crucial and essential levels. Pure price structure is what determines wave formation, wave terminations, and what identifies these crucial areas for entries, targets, and areas of inherent danger. That's all there is, guys. So let me show you a couple of things before I start answering your questions. If you come to the blog, you can review multiple videos all the way until November 5th. You can view the videos, you can read the comments. If you come to the Fibonacci forum and you go to the Fibonacci forum archives, you can witness number of previous posts and the importance of Fibonacci levels, reversal zones, and you can witness how everything is projected far in advance. If you decide to learn, we're doing something that I do only once or twice a year, which is Fibonacci Trading Bootcamp. We're starting on December 11th. So anybody who decides to learn anytime during months of November and December will have privilege to learn in condensed trading environment. So I love Fibonacci Trading Bootcamp because we are in the room only with students without any interruptions, and it creates entirely different vibe. So any questions, I'd love to answer them for you. So I would greatly appreciate if you just post the instrument and time frame. I'll bring up a chart and I will show you my projections and what my method telling me on that particular instrument and that particular time frame. So I greatly appreciate if you start with futures, and then we can migrate to major stocks and Forex. So just, for example, soybeans 5 minute, pound yen 60 minute. Excellent question. Any questions about futures, please? Let me know. Any questions about futures? Pound yen 60 minute. I see that. And I see multiple things being typed in. I use multiple charts. I have about 30 charts open. It doesn't matter to me. 1, 3, 5, 11, 8, 21, 75, 85, 5 range, 8, whatever. It doesn't matter. Second question about Forex. Okay, guys, if there's no questions about futures, I am migrating to Forex. Aussie dollar coming up, pound yen. Currently, I work with a couple of Forex traders, and I actually just came back from Miami meeting a couple of our Forex traders. Okie dokie, pound yen 60, Aussie dollar coming up. It is not the same, absolutely not the same. Fibonacci can be used in a million ways. I developed my own levels, I use it with my rules. If you have Fibonacci but you have no idea how to use it, you're using it randomly, incorrectly, it means nothing. Okay, guys, let's take one question at a time. I'm bringing up the instrument manager to pull up the instruments. GBP is Aussie dollar is here. Now let me go. Pound yen. And I will show you a couple of exciting charts. One of my most exciting charts of all time is Euro weekly chart. Next question, GBP, JPY. Here it is. Quite a few forex traders. Natural guess, I'm not sure. I have nothing to do with market profile. Market profile is indicator. When you come to my room, you use nothing, has nothing to do with market profile. It's like comparing apples to oranges. I trade price. I do not trade market profile. Absolutely nothing in common. Any other questions? Natural guess. There is no time frame attached. I will pull up the time frame NG. NG. Here we go. Projection on a daily chart. Excellent question, Brian. So let me answer Brian's question. Daily chart I have not touched in weeks. Here's S&P daily. I'm doing presentation next week for timing research. This is where S&P struggled on daily chart for 5 days. End of minor trend. 1, 2, 3, 4, 5. Finally blasted through. This is next level on S&P 2069.50 and next level 2154. If you remember, I spelled out 2100 is absolutely crucial level as it is on monthly chart. Clear? Every single level in the market, Nina, support and resistance is Fibonacci level. There is no support and resistance that is not Fibonacci. It is formed by Fibonacci levels. Word support as resistance is for regular person. There is nothing random in this world. Every single support and resistance is preset far in advance by Fibonacci levels. So let me show you something on Euro from my archives, which is actually posted under Fibonacci archives. So let's take a look. One of my favorite charts of all times. So since 2013 we had been shorting Euro from 3900 level. You could see what it means when price came to reversal zone, correct? Correct? And what have I been saying? Price will head to 3200, 2900 area. Correct? This was the end of the minor trend. Lovely? And I've been saying, will this price make it to 3400 a year later? Pay attention to what was 3400 to the upside in August 2013. Is that clear? Level projected since 2013, short from 3900. Made it to what levels? And that's the magic of the price. That's resistance level, identified by Alpha Wave Trader method as reversal zone. This is Euro weekly and this is S&P hourly. Same, identical formula. Make sense? This is what students call in the course is a peacock chart. So, and where is Euro currently? Let's take a look on all the other charts. One second, please. I want to go in the order of the questions received. So the question on pound yen was on what time frame? Pound yen 60-minute coming up. Pound yen is the beast of the forex. You had quite a lovely long opportunity on pound yen from 181.40 area based on my method, and let me show you why. Once again, as I always spell out to my students, do not ever ignore the end of the minor trend. The same level where oil monthly is currently, first time in a year and a half. This is where pound yen hourly staged pretty impressive reversal. Make sense? Right now, pound yen is heading, without even applying Fibonacci levels, until 181.50. 181.50 response in that area would be critical. Make sense? So if you were shorting pound yen, this is picture perfect reminder. Do not ever short close to this crucial Fibonacci level that identifies the end of the minor trend. Buyers been coming from this area since October 9th and finally succeeded with vengeance. The response on pound yen at 181.50, if you're considering the spread, start monitoring 181.60 is crucial. Absolutely crucial. And here it is a reminder. Support level identified by Fibonacci level. Next question is Aussie dollar daily. Aussie dollar daily. Coming up. So most people who I work with who trade Forex, we currently have a couple of Forex traders in group setting and quite a few in private mentoring. We have a DEX trader. We have extremely international community right now. So 1 second please, Aussie dollar is loading, Aussie dollar is loading. Let's take a look what Aussie dollar is telling us currently, shall we? Once again, this is a picture. Hold on. Not sure what just happened. That was cute. So this is picture perfect reminder. First time price came to reversal zone. First time price came to reversal zone. Started finding serious buying pressure, correct? Everybody clear on very essential level that I named reversal zone? How many days has the price struggled here? This is absolutely crucial, the response from today. I expect tomorrow to be quite an impressive buying power. And let me show you my projections further to the upside on Aussie dollar. Again, I have to be in Forex session to give you the exact projections, but this is what I'm seeing on Aussie dollar. These are the levels to the upside. The end of the minor trend, 87.27. Next level here. And if this level is broken, price will fly to this area. Make sense? Once again, price started reversing from reversal zone of the bearish trend. Clear? As I explained through the entire webinar, you can trade anything. I lead actual live trading room for the last 3 years. You have a bunch of live trading recordings as spelled out. It's all over my website. 3 years of performance, daily performance, live. Yes, da. Next question. Let's stay focused. Okie dokie. S&P already answered. Let's go. What was the next question? Pound dollar. What chart, please? Thank you, Carol. What chart on pound dollar? Sandy, there is no time frame attached. Okay, so I'm going pound dollar daily since no time frame attached. Pound dollar daily coming up. Pound dollar daily currently in between the levels. 5800 is a huge level on pound dollar. Huge, humongous. So, do not short anywhere near 5800 level. So, what are you witnessing? Pound dollar is between the levels? Is between the levels. Respecting decision point too highly. 5800 is huge. This is becoming extremely dangerous area between 5800 to 5686. Sellers are completely in charge. Nevertheless, 5800 is extremely unpredictable. Do not short anywhere near. Is everybody clear on that? If you're a day trader, you still have a bit of a room. If you're a position trader, 5800 is not far off. Way too late to short. So please pay attention, see what happens. 5800 and next 5700. Shorting drastically higher levels. This is where price becomes extremely unpredictable. Aussie Yen daily coming up. Any other questions? Please do post. Few more minutes, traders. Any other questions about any other instrument? Please do post. Aussie Yen daily. We already looked on S&P multiple times. We looked on monthly, we looked on hourly, we looked on daily. It's been done, Nina. You have to recognize every single instrument has different abbreviation. This is SPY in front of you. We brought up multiple time frames. So, Aussie Yen daily coming up. Aussie Yen daily. 1 second, please. Anyone trades whatever. In trading room, I trade futures. We have quite a few forex traders who are asking questions. It doesn't matter to me what anyone trades. So here we go. Magic of the price. Reminder, if you are long on Aussie Yen, you don't want to be long anymore. So heads up, if Aussie Yen is blasting through this level, which it's showing potential it will, it's collapsing here. Is that clear? Yes, Carol, absolutely. Absolutely. Whoever asked me about Aussie Yen, very, very crucial formation. Inception of the bearish trend. Your bias should be only bearish, no longs here whatsoever. Only bearish. Sellers are heading drastically lower. Any other questions, please? Copper, future, NVDA daily. All right? Copper future and NVIDIA daily. If NVIDIA is a major stock, I will find it. Copper and NVIDIA. All the levels done completely manually. You apply the knowledge, you apply the rules you learn in the course. We have students currently on TradeStation, Sierra Charts, MT4. Any platform that has price has Fibonacci tool. It is free. Completely free on any platform. So let me pull up copper. Let me pull up copper. OCN is pretty spectacular formation. Wow, I don't remember having this many Forex traders in the room in forever. Copper coming up. So bottom line is you apply your knowledge, you apply critical rules, and you can trade anything. You know all the levels far in advance. Copper is loading up. Copper daily, that does not look normal. 1 second, please. Having a bit of a data discrepancy. It's not very pretty. Does this require some sort of special data feed for copper? It has way too many gaps. Let me take a look on hourly. Yeah, hourly chart make a whole lot more sense. So let's take a look on hourly and let's see why copper is a bit confused at this particular moment. So I just wanted to show you. Yes, I teach in the course everything in detail. Link is posted on the website. You cannot possibly learn how to do the levels in 1 hour webinar. This is where I demonstrate the levels, but I cannot teach you. Education course is 8 weeks. Currently we have a couple of students who were 100% accurate after the first class. So here's copper hourly. Copper hourly, what do you see has happened when copper came to reversal zone? Found buyers from reversal zone and was not able to break through the end of the minor trend, correct? Make sense? But this is picture perfect reminder. Sell from here, buy here. Reversal zone in a play, sell from this level. Right now it's worthless, bullish corrections. Copper is heading to here. Clear? That's for you, Sandy. Another question was on USDJPY and NVIDIA. What time frame on NVIDIA? My pleasure, Sandy. NVIDIA. Let's see if we have NVIDIA. I have major stocks. Let's find NVIDIA. I do not. Ask me Amazon, ask me Yahoo. I don't see NVIDIA. No NVIDIA. No, it's index. My apologies. Stock. Let's take a look. Here it is. NVIDIA. What time frame? Daily. Let's go on NVIDIA. Let's go on NVIDIA. Thank you. You don't want to belong NVIDIA, John. You don't want to belong NVIDIA. NVIDIA is hitting until 1924, 19 and all the way to 1850. That's NVIDIA daily. Once again, as expected, that's what happens if you start acquiring position in reversal area. Not a good idea. Is that clear? Major trend is bearish. NVIDIA is heading south, south, south. Let me show you precise levels on NVIDIA to the tick, to the penny, where it's heading next to. The end of the minor trend on NVIDIA will be 1874. Response at this level is crucial. If NVIDIA is breaking 1874, it is heading to 1795 and all the way to 1674. Clear? My pleasure. USDJPY, and we are done. Tomorrow morning support will send you invitation to the trading room. I will post link as well. If you have any other questions, please do ask. Just wanted to show you something on US dollar yen, how crucial the reversal zone is. How marvelous is this? Reversal zone, buy, buy, buy. Is that clear? You don't want to be buying here. Way too late. This was marvelous long opportunity on dollar yen. Ultimate exhaustion of bearish trend, ultimate long trade. Any other questions, guys? Please let me know. I thank you so much for your time, and I wanted to highlight to you again, only once or twice a year I do the Fibonacci trading bootcamp, which is triple the education, which is not something typically we do. In the month of December, I'm closing trading room completely to the visitors. I work only with my students, teaching advanced strategies and trading only in bootcamp-like environment. I'm quizzing students on every single move, every single tick. There is no ifs and buts about it. Yes, Sandy, that's where we're heading to next. Very crucial reversal levels across multiple charts. Next year it's going to be quite exciting. All you have to do is take a look on the monthly charts. Reversal zone is not far off. Are we gonna get bearish correction or are we gonna get bearish reversal? That remains the key. So, every time price comes to reversal zone, it does two things. Bearish reversal or, like the case today, bearish correction. That's not far off on S&P monthly. Multiple stocks, multiple indices. You have to be prepared for volatility. You have to be prepared for execution. You have to be a knowledgeable trader. You have to recognize the importance of these levels. This is precisely what sparked my knowledge of the price and developing my own method. When in 2008 I was stuck in stocks that had phenomenal fundamentals, and these stocks were collapsing completely. That's why I learned news is completely worthless if it contradicts the price. We trade against news all the time. It doesn't matter how bullish the news is. You have the most bullish news and we short if price in reversal zone. Everything preset in price, far in advance. And that what encouraged me and inspired me to develop my method. Once you learn the inception of the trend, you know extremely clearly how essential it is to respect these levels. And if you can trade 1 minute, you can trade monthly charts. If you can trade oil, you can trade ETFs. If you can trade range charts, you can trade Forex. It's all the same. No, Nina, they do not. Most traders do not obey the rules. I developed my own rules, 4 critical rules. That's all I teach, and that's all I stand by. Yes, do you know why? Because monthly chart came to complete collapse. Complete collapse. Bullish rally had ended. That's precisely the reason why we had seen that in 2008. So thank you guys. I thank you so much. Let me post the invitation to the trading room. That support will be following up. Anyway, tomorrow morning they will send you that again. I am demonstrating the method in my trading room only on S&P and oil. So here's the link if you would like to come in and visit the trading room to observe what I do. Here we go. So thank you, traders. I'm always open for your calls, for your emails. I always look forward to speaking with you. Thank you, Sandy. Thank you, Carol. Thank you, traders. Thank you so much. Look forward to seeing you tomorrow. Always open for your feedback. Always open for your calls. I believe in magic of the price and Fibonacci. I believe in power of the trader. Everything else is background noise. Just remember, every single day you come to the markets is a test. And if you play by the rules, you can pass the test. So thank you so much. Have an amazing afternoon. Look forward to seeing you tomorrow. Thank you, John. My pleasure. Thank you. Thank you so much. Take care. Thank you, Brian. Marvelous. Thank you so much. Bye-bye.